Hey guys, so I came across this video today. I wanted to share it with you, and I wanted to also hear about your thoughts. So, yesterday I shared you a video about high cholesterol. I thought it was interesting. Now, I don't know too much about the body, I don't know too much about like cells, and that's why I wanted to share with you guys. I'm always open to hearing otherwise. Now, this is a person that I've been hearing about a lot. His name is Jeremy Grantham, and I will tell you guys openly, and you guys all know this. I'm very much bullish. I've always been a tech bull. I am invested into tech stocks. You guys know I'm very big on Apple, Microsoft, Tesla, ARKK, and I've always held this conviction that the stock market, when it does recover fully, right now it has a little recovery today, tech will lead the way. And I believe tech does change the world immensely, and that's the reason, one of the reasons why we see such gains with tech now. This was something that came out in 2019. Jeremy Grantham has basically been telling about like the economy going into recession, rivaling 1929, and maybe it's going to come true, maybe it's not. But remember, 2019, this happened before the situation, before the shutdowns, and I think, when I look at the chart, and I'm going to show you guys later for SPY, yeah. Anyway, here's what I want to show you guys. So he's asking, do you think basically the U.S. stock market is attracted to invest in? Ouch. I would stay away from the U.S. Okay, so I consider this guy to be King Bear. Yeah, it's even like when he delivers things, it's always very gloomy, and I haven't been investing that long compared to this guy for sure. I started investing in December 2017, but let's look at SPY. And if you guys look over here, right, this is when I got it. So it went down, and then it went down even further, and then it went up, and then it went down, and then it went up, and you guys know about that correction. So my firm belief is this: the U.S. economy does not go up and down, but it does have shakeups, and this volatility, you don't know how low it can be, right? I remember when the what happened. I don't want to say it on stream, but you know what I'm talking about. The stock market took such a big tumble that it was, when I looked at it, I was like, oh crap, this is freaking terrible. Now, um, I'm sharing this with you guys because I want to be very I want to share with you guys, like, most people are either going to be on this side or the bull side. And I know the bull side has gotten a lot of slack because you look at stocks like, let's say, Tesla. It's right now, I think it's about $716 or so, and it is straying away heavily from fundamentals, but people are propping that price up because they believe in it. Same with Bitcoin as well. Let me look at Tesla. So Tesla right now is at 713. I actually went all the way down to, what was the low? The low of the month was 682. So I was thinking about buying more Tesla, but anyway, point being is, I think words like this, I would stay away from the US. When people hear about this, they either get spooked out, they say, screw it, I'm not going to invest, or I'm going to invest in something incredibly safe. Gold. Gold doesn't move very much. Silver, that sort of thing, commodity stuff. And I don't know, you guys. Like, for me, like the way I see it, and maybe like how long I've been investing has been showing, but I always think I want to invest in stuff that has more gains, because if it has more gains, and I'm not talking about like the meme stocks now, but what I'm talking about is companies that I think have strong fundamentals, and if there is a correction, it will go back to where it was, and it will recover. So, for instance, like nobody would bet against Apple, right? Every year, Apple comes out with new computers, new laptops, new smartphones, new products. They've really turned into such an ecosystem. And so this was in March 7th, 2019. He said he would stay away from the U.S., right? Okay. So it was a dip. So let's say you stayed away from the U.S., okay? Yep, stay away from the U.S. Stay away from the U.S. And this situation, like I said, nobody predicted this one at all. Nobody would have expected the you know what to happen. But if it didn't happen, and even after it did happen, it recovered. So I'm not seeing the point of staying outside of the U.S. That's just me. I think that if you had invested, let's say early on, right? Let's even say over here, right? You have to be able to have some sort of volatility. You have to be tolerant of it, because if you're not, you're never going to see gains like this. Like no stock goes straight up. I have said this multiple times, and I'll say this again. And I know it sounds really stupid for me to say it this way. And I'm going to even throw out Bitcoin. The people who believe in Bitcoin, they've been holding on through ups and downs and ups and downs. And that's one of the reasons why it has like this footing, in a sense. It's like people are just, hold on, Bitcoin price. So Bitcoin right now is 49K. I saw it earlier at 43K, I believe. Let me show you guys this. See this? So there has been volatility with Bitcoin. It's a little too volatile for me to want to go all in and invest in all at one time. So I am averaging, and that's the same strategy I use for stocks. I have been looking at stocks, and I averaged down for like ARKK, for instance, just a little. I don't want to change too much holdings, but I'm going to end the stream with this. Rules that Warren Buffett lives by. Of course, this one is never lose money. Rule number 2, never loses money. And yeah, so he is all about making sure you do long time investing. He also says if the business does well, the stock will eventually follow. So again, Microsoft, I think that it did tank last week. All the stocks tanked, but I don't see any problem with Microsoft. And then he also believes, it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. Okay. And here's the big one. Our favorite holding period is forever. And he says, if you don't feel comfortable holding a stock for 10 years, you should not own it for 10 minutes. Even during the time period he refers to as the financial Pearl Harbor, Buffett loyally held on to the bulk of his portfolio. So unless a company has suffered a C in prospects such as impossible labor problems or product obsolescence or long holding period, will keep an investor from acting too human. Being too fearful or too greedy can cause investors to sell stock at the bottom or buy at the peak or destroy portfolio appreciation for the long run. My thinking is, and I know I'm repeating myself, but whenever I invest into stocks, I always try to invest mostly into stocks that I see myself holding for about 5 to 10 years. JD is one of them. Amazon is one of them. As much as disappointing as Amazon has been, you guys can look at the chart if you guys want. I don't have any problems with Amazon. It might be, the thing that holds my portfolio back this year, but I do think sometime this year it is going to spike up. I don't see it just gaining 2% in the entire year. So, anyway, so I just wanted to give you guys a little bit of insight about, there are some people over here. I do recommend watching him, Jeremy Grantham. It is good to have like a different view or hear what he's saying, but my take is after listening to him, if you give a time, you're going to be right 2 times a day, right? If I tell you, hey, it's 12:30 p.m., you could say, it's not 12:30 p.m., but if I keep telling you that, eventually I'm going to be right, and maybe one day I'll tell you it's 12:30 p.m. and it is 12:30 p.m. So this is something that I keep in mind, but again, I stick more with the Buffett idea, where I try to have stocks that I don't have to worry too much if it does tank 5% or so. I think to myself, well, I've been holding for a long time, I have profit, and I believe it's going to recover when the stock market does recover. So anyway, I will talk to you guys later. Um, one moment. Man, that guy left without saying bye to me. I was doing my stream. Yeah, he just waved to me. Well. Anyway, you guys know between, hold on. You guys know between Lewis and I who is a bull and who is a bear. Um, and it's okay, you know. Not everybody has, believes in a stock market that much. And again, I think Jeremy does bring up some good points, but I would not do the whole I would stay away from the US. Or saying, it's like squeezing blood out of a stone. I mean, that is some really freaking depressing stuff to hear. And I can't also help but think if people listen to him, they could say, "Oh, okay, well, I'm not going to invest in the stock market." Yeah, cuz it's going to be terrible. There's going to be a crash coming. I'm just going to sit out so I don't lose my money. And there are people who I've been hearing this for a number of years, right? Ever since like 2008, you've always been hearing people say, "Oh, it's a bubble. Oh, the stock market's gonna go down. Oh, just wait, it's gonna go down." And then other people who aren't investing will say, "Yeah, it's gonna go down. I don't want to lose all my money, so I'm gonna sit out. I'm gonna sit out." So if you heard any, let's say over here, right? You see it, and I'm just using SPY as an example, right? Because this is an indicator of kind of like the market. So, it's like you see it, and then people could see this and be like, "Oh my goodness, I bought over here, 286. Oh, dang, look at this, look, oh my gosh, it's falling, it's 258. Oh, okay, and then people from the sidelines will, when you hear about the whole Dow losing 600 points, or there was this one time, I forgot when it was for SPY, but it was just absolutely terrible. I remember hearing from the sidelines, and I thought, man, some people must be really, really, they must have lost everything. Gosh, and this is when this is before I was invested. So when I used to hear about the news on the TV talking about the doom and the gloom of the stock market, it just kind of reaffirmed this idea in my head that, yeah, I can go broke if I invest in the stock market. Look, the stock market is crashing. There's all these people are talking about how bad the stock market day is. Yeah, I better stay out because I don't want to lose my money. And if I had just stayed out of the stock market, then I wouldn't have a portfolio right now where I am in the profit. So I have a really good profit in my opinion. But yeah, so if you hear about like this, and you guys can see you guys can't see my cursor, but you can see the thing moving, right? Yeah, so let's say you buy over here, and then you hear about the stock market crash. You go, okay, I'm gonna sell, and then the market's recovering, right? And then there's a crash over here. Oh yeah, see, I knew that I should stay out. Yeah, cause look, it crashed again, and then yeah. So then of course over here I'm gonna not really count this because this was a situation that nobody saw in the whole freaking world. But you know what? So I do believe that, again, I do believe the stock market is gonna, I do believe that what happened recently was a correction. I don't believe that it was a drop of epic proportions, or we're gonna go on to like 1929 and people are gonna say, "Oh, I lost everything for the stock market." But the important thing too is that if you invest into the stock market, unless you have a clear enter and exit plan, which some people do, day traders do, I would not recommend getting into the stock market unless, and this is just my personal opinion, not financial advice, just me ranting, unless you're okay with holding for extended period of time. Because if you have like little shakeups here, right? Let's say like from 342 to 328, right? You might put like a huge amount of money. And if you do put a lot of money, like an $11 drop could be a sizable for you, percentage wise. But if you believe in it long term and you're willing to hold through the volatility, you can be rewarded. So that's all I wanted to say about this stuff. And again, whatever I post, whatever I tell you guys, you will always see it come from the side of a person who is a bull and who is strong on tech. And again, if the stock market goes down, tech will go down. People will always say, oh, look, tech took a tumble. And then people will also say, tech is so overvalued. Yeah, so it makes sense. Yeah, if you're holding on to a tech stock, oh, that's not the real price. Oh, yeah, it's just been bubbled. So you should get out of the stock market because tech is falling. Oh, so I take that mostly with a grain of salt. Again, the fundamentals for a lot of these companies, they didn't change. Actually, they didn't change at all last week. It's just there was a shakeout, and I have this firm belief that the U.S. government will not crash. The U.S. government will not allow the stock market to crash. There is a transitionary period to, hopefully the economy recovers, but yeah, a lot of things are getting propped up, and the whole idea is you slowly wean the money going out, and then the market just slowly can recover naturally. And with all these measures in place, again, I am not worried about the stock market. I am not seeing it do a free fall or SPY going down to $70 anytime soon. And there's a lot of money put into the stock market, so if you look at, let's say, people, right? People who are investing a long time, if the stock market drops 20%, let's just say that the stock market drops 20%, these people are just going to say, we're going to hold. And I've been trying to find this article for you guys where there was this one fund manager, a person who had his own investment company. After the situation happened in March, they actually thought, should they sell? Should they, liquidate everything? Are they going to be ruined? And they realized that they need to go back to fundamentals. And their fundamentals was the market will always recover, buy low, right? Sell high. And when you see the dip, as many people will tell you, yeah, get out, sell. You can see that as an opportunity to double down. And that's exactly what Cathie Woods did, as you guys know. And she got a lot of crap about that. And maybe it's going to age poorly, right? So Cathie Woods bought the 13% dip in Tesla as ARKK slips again. So for her, she saw it as this, and I know people gave her so much crap about it, saying, why would you buy Tesla? Tesla's overvalued. Tesla's going to dip more. And it actually did dip a little bit more. I think it kind of balanced out around 684 or so. Let me look at this. And right now it's around 715, 712. Okay. So I kind of regret not buying around the $690 mark. But again, I was a little hesitant, frick, what if it goes down further? Because I can't, I don't know what's going to happen the next day. But it looks almost like you have, to me, it looks like it's recovering. Because I can see that it went all the way down to 660. And then it was over at 675. So this dip, 660, is lower than the 675. So if it dips now, I expect it to go no lower than 660, because last time it dipped to 675, you see? Or if it does dip, maybe it'll be higher than that. Maybe it'll be 700. So I have a buy price set in for Tesla because I'm averaging, right? And this is probably going to be my last Tesla share that I'm going to be buying because I moved a little things in my portfolio. I don't want to add more money into the stock market. There is uncertainty over here. So yeah, I'm looking for my little dip, and I have a little buy order placed in at $699.95. We'll see if that thing gets filled up. If it does, great. If it doesn't, whatever. And yeah, so I've been treating this as a little buying opportunity, and again, you will hear people say otherwise. Oh, you can't hear the audio from the video? Okay, here we go. Okay, maybe it's because I have the speaker on. Here we go.
there at these prices. Even the has pivoted and become, relatively speaking, more easy once again, and the ECB has done that too today. Does that make you think that US equities are attractive for the next couple of years again? No, I'm afraid not. You can't get blood out of a stone.
Ouch.
There at these prices. Even the bears, the bulls, and everyone in between at GMO agree that over a long horizon, like 20 years, U.S. market will be delivering 2 or 3% real. Mm-hmm. And for the last 100 years, we're used to it delivering perhaps 6% real. So this is a fairly painful, it's not the end of the world, but it's going to break a lot of hearts when we're right. Mm-hmm. 3% a year is going to seem terribly disappointing. Now, if you stay away from the U.S., which I absolutely would, in emerging markets, I suspect you can do even better than 6, maybe 7 or 8 if you tilt it towards value. Your 5 or 6 year forecast is for actual declines in U.S. equities, is that right?
I would stay away from the U.S. So, like I said, I consider him to be one of like the king bears over here, and I've heard him talk, and I think it sounds a little too gloomy for me. I understand what he's saying, okay? Don't get me wrong, but when I look at the chart, I just kind of think, man, if anybody, when did he say this? He said this back in March 7, 2019, right? If anybody had watched him, let's go March, right here. If anyone watched that, they'd be like, oh, okay, so I'm going to stay out from like the U.S. equities market for the next couple years. And they would say, okay, yeah, I'm not going to buy. So look, 279, right? You see that price? 279. Let's say a person looks at this, okay, Jeremy Grantham says stock market. Okay. Oh, yeah, see? Look, it went down 275. Oh, yeah, he's right. But then look, it just kind of goes up. And the whole situation over here, you guys know what happened between February and March 2020. You guys don't need me to say what happened. You know, the shuts. That thing, like, that was unforeseen. Okay? So, but afterwards, you guys know the federal government stepped in. There was a lot of money being pumped in. And then people just started going and saying, oh, okay, we're going to keep going up. And I have... I'm not surprised that it went up when I think about it, because when you have government step in, and then you also have people seeing like, okay, there's going to be some assistance over here, they just throw their money in. And I view the correction that happened recently, that people were like, oh my gosh, it's gonna go down. I always viewed it as a correction. I did not view it as like a permanent thing. I thought maybe it'll take a couple months to resolve itself. I didn't see it being like a couple years, because I did hear that the stimulus stuff, and I didn't pick up any worry, except the only worry that I saw was like an ARKK investors. Those people would say, oh, the stock went down for ARKK. Tesla's a piece of crap. How could we invest in that? Oh, Kathy Woods is way too religious. She's a nutcase. And yeah, but as I had mentioned before, Kathy sticks to her game plan. She buys a dip, and you can see that her ETF, and this is not financial advice. This is just me talking, right? It's kind of like, yeah, I'm not too worried about it. Okay, it did dip hard, but I feel like it's going to recover. And maybe I'm right, maybe I'm wrong, maybe it's going to go lower. But this is my thoughts, and I'm planning to hold ARKK as a long. And I stick with the whole thing. Like, if there's a shakeup and if the price goes down, then this is a buying opportunity. So while this thing was going down, I did start averaging down. So I think originally I bought around 137, 138, and then you could see it spiked all the way up to like 156, and then it went down. So anybody who had bought like around here, or even here, right, in January, if they're new investors especially, they could say, oh, I thought this was guaranteed money because it just seems like it was going up. And then when it tanks all the way down here, then some people could say, oh man, how do I know it's not going to go back to like $80? And then they get shaken out, and then they probably will never ever invest again. And I understand it. Again, If people cannot handle volatility, if they cannot handle up and down, then they're better not into the stock market. For me, I have like a different risk tolerance, right? I'm just a bull. So I'm a tech bull too. So when I see these little dips, I've thought to myself, okay, this is just going to be temporary. The stock market will recover. I'm not going to stick with the whole, 1929 recession is going to come. Don't get into the US stock market for a couple of years. Because if I had followed that advice, you guys, I would not have had gains in my stock portfolio if I just sat out from the sidelines. But it's because I believed in the long-term view of the companies that I invest in. So let's look over here. My little rock over here. This is not the best thing, but I'm going to show you. So 5 years for Amazon. I purchased around this price. I think 1488 or so. Yeah, I invested around here. So I've been holding this thing since 2018. It went up, and then it went down, and then it kind of went sideways. And then after the situation, it spiked up, and again, it's kind of sideways. But I do strongly believe in Amazon going up, and then most likely sideways again. It's not going to be a big jump up in a really short amount of time. It could be a gradual thing, or maybe, but I kind of feel like Amazon really needs to do a split, because 3,127, it's just, like, when I look at it, you guys can look at the price here. Like, look at this, it's freaking sideways over here. But I don't worry about Amazon. I think to myself, it's just going to freaking stay sideways for a while, whatever. So my view about this is long, right? And that's why when this thing goes down a little or it goes sideways, you hear me cursing under my breath about Amazon. But I'm not worried about it, because I know it's going to be around. And the other thing, too, is it's very well diversified. They have, look, this Whole Foods, Audible, Ring, Zappos. Let's check over here. We have so many different holdings. It's kind of insane. Okay, here we go. Look at this. See at the top, Whole Foods, Audible, Ring, Zappos, Amazon, Blink, Woot. They're just acquiring everything. Crate Space, PillPack. We're going on and on and on. I never heard about that. 10 Marks Education, Brilliance Audio, and then I think the bigger one is the one that really is pushing the stock forward, in my opinion, is AWS. So let me see. Yeah, I don't believe in Bitcoin going up, propping up economies during times of difficulty. And I've shared with you guys this. So you remember how the situation happened in, look at this. You remember how the situation happened in March of 2020, February, March? If you look at the price of the stock, it took a dip. You see the dip right here? 9,000 all the way down to 5,000. So don't think that if you pull out your money from the stock market and you go into cryptocurrency, if the stock market fails, then crypto's going to go to the moon. I don't believe that at all. But all these people who do believe in Bitcoin, they, you just hold. It's, and I know it doesn't seem like a strategy. People will tell me this, right? They'll say, Erica, it's holding is not a strategy. It's just really doing nothing. But the whole point about holding is that if you have volatility and you believe in the thing going up, then just wait for it to recover. You don't like kind of step out and then say, okay, I sold it at the dip, and next thing you know, it freaking recovers. So I know some people don't like Bitcoin, but I'm going to share this. So let's say you had bought in around, let's say 16K, it goes up to 19K, and then it tanks all the way down, right? And then you see it go up. And I know there's some people who might see it go up to 12K, and let's say they bought it at 19K, and then they see it go down to 10K, and they're like, oh, frick it, man. Okay, yeah, I'm going to sell. So then they have a loss of $9,000, right? Because before it was 19,000 as the top. Or they say, oh, frick, okay, I'm holding. Maybe I'll get better. And then the situation happened. Oh, frick, it's at $5,000. I bought it at 19,000. But then you got people who are holding, and now it's at 49,000. And I know Bitcoin is, some people would say Bitcoin is a bubble, Bitcoin is a scam, blah blah blah. I get it, but my thinking is that with all these institutions buying in Bitcoin credit card coming out soon, sometime in spring 2021, I'm gonna bet that the price of Bitcoin is gonna spike up higher. But again, I'm not too comfortable with going in at one designated price, so that's why I'm averaging in weekly. And if it goes down, great. If it doesn't, whatever. So Bitcoin, I saw it go down to 43K. I have an auto invest set up, and the money has to be held for 7 to 10 days. And I was looking at it, I was like, oh, for frick's sake, auto invest, you already pulled the money from my bank account. Can you please just cash out on Bitcoin at 43K? And it did it, and then it recovered. So, but again, maybe it'll go down to 45K, maybe it'll go down to 40K. Whatever it is, I'm going to be holding, because I firmly believe Bitcoin will hit $75,000. Not tomorrow, but it will over time. And other people believe it's going to hit $100,000 by the end of the year. Some people are saying they believe Bitcoin is going to hit $1 million. I think that's a little, even for me as a bull, as a very optimistic person about gains, I'm like, I don't see the Bitcoin hitting $1 million anytime soon. But I have enough reason to think that, when I look at this chart and the fact that Visa and there's MasterCard credit card coming out with the rewards, I have enough reason to believe that, yeah, this thing is going to go up. And I don't know how much it's going to go up, but it's good enough to average it. It's good enough to average it. So if Bitcoin goes down to 30K, I actually wouldn't be surprised if it hit back around like 37K. I think I told you guys in a previous stream that I felt like if it did crash, because people aren't talking about it, down to 25K, I wouldn't be surprised either. And I came up with this, I think, when I looked at the dips. I forgot where I calculated it, but I think it was in between, I think it was in the middle between here and here. So, and then I came up with 25K. So if Bitcoin hits 25K and you got people who are, just trying to go in there for like the quick gains, or they thought Bitcoin only goes up, a lot of people are going to be mentally shaken out, right, at 25K. But then you also have a bunch of people who are like, hold, maybe it can go higher. And yeah, it's good enough for me to just think, I don't want to sit up from the sidelines. I will see what happens. And yeah. But again, I know there are some people who are against Bitcoin, and I completely understand it. You have people who are going to say, Bitcoin is naturally zero. Jeremy Grantham is one of those people. He believes it's naturally worthless. And it took me a really long time for me to wrap my head around Bitcoin. I was looking from the sidelines for a number of years, and I thought, like, man, all these people are going to lose their money. And then I ended up at the point where it's like, the only person who I felt really lost out of money was me, because I didn't even have any footing in Bitcoin. So this isn't really, I would say that when I look at Bitcoin, I see it as this is enough. There's enough reason for me to just kind of dabble into Bitcoin. And what am I going to do with Bitcoin? I plan to just hold. And if it goes down to $20, you know what? I would still hold. At least I can say, I thought that this was an opportunity, and I put in money that I felt comfortable investing in. And if it does like balloon up, or it does fizzle out, I'm okay with that. I'm okay with that risk of holding as a long. But again, other people are not okay with that risk. If you deal with something like Bitcoin, there's going to be a lot of people who just get shaken out when it takes a dip. And those people, if they're locked in their losses, they're going to be negatively impacted by this. So I feel that, and this is just my theory here, but I feel that depending on what people's tolerance about the stock market is, if they have volatility and they are not accepting of it, then these people will just, when they do like get out, or if they do feel like, oh yeah, when they do get out, and if they do suffer a loss, they're gonna say that they're just gonna sit out. And you know what? that's okay. If someone cashes out for a loss, that's okay, because during that time, if they felt like they wanted to sell, or they had to sell, or they felt compelled to sell, and like you could see all these people were Bitcoin over here, right? Like this huge thing. Those people, you would be under a lot of stress if you have to hold through volatility like that. And I've spoken to a few people who are holding on to certain stocks for a very long time, and I said, how the hell did you hold on to a certain stock while it was getting dragged through the mud? And they told me, they said they don't check that often. They believe in their holdings. They say, I put in money towards something, hopefully this surprises me. And sometimes it pans out, sometimes it doesn't. Sometimes stocks go under, but more than often, if they've been investing for, let's say, 5-10 years, they're okay with it. They look at it, they're like, holy crap, I bought this stock at, let's say, $4, and now it's $100 a share. Wow, amazing. So those people can deal with volatility. If they watch news and they say, oh, stock market goes down or Bitcoin goes down, they say, that's okay. That's okay. I believe in it long term. And again, I don't stress too much out about the market, because I don't think the stock market is going to fail. But if you are a bear, if you are like around Jeremy Grantham, then in my opinion, you should stay out of the stock market, because if you see any dip in the stock market or any dip in the Bitcoin, that will just reaffirm your belief that it's crashing. And that's a lot of stress. So that's all I wanted to say about this stream. I know that a lot of the stuff that I post seem very optimistic. It seems that I am just, kind of on this whole thing where I don't think the stock market is going to crash, but I acknowledge the stock market can crash. I don't believe it happened last week. I don't think it's happening right now, but whatever happens, I'm just going to hold it as a long, and then come back in like 2 years, 5 years, 10 years. I'll look back on my portfolio and hopefully I'm happy with it. I do not want to bet that the stock market is going to be repressed for the next 6 years. I do know that happened in 2008. But again, I know people who have invested before 2008, before 2008. And when 2008 came, they were bummed out, don't get me wrong, but they said, they're just going to weather the storm. They're just going to see how it is. They're going to just do the whole Buffett thing, which is our favorite holding period is forever. And after they got out of 2008, and then after, they're going to where it is now, they look at their portfolio and they're like, oh, not bad. Yeah. So it's not hard to do, but it takes a lot of mental strength, and you got to just have faith in your holdings. And I have faith in my holdings. Even JD, even though I've been cursing about that stock a lot, you guys can look at JD stock. I think I put a community post where I mentioned to you guys when it retracted back to $93. I was like, F. Look at this. So $91 February 1st, right? And then it went up to 106, 105. And I had a feeling that whenever JD goes up to 106, it always shoots back down. Frick. I don't know if it's just bad luck or what, or it's just down. Get it? JD, just down. But after it went down to 106, then it went down to 93, and I thought, oh, for frick's sake, knowing my luck, we're going to be back around the $88 mark. So you can see around here, it was kind of floating around like the $88, $91. See this? Oh, this pisses me off. $88, $91. Thankfully, it went to 93, and then it shot back up to 97. So hopefully I don't have to be haunted by the $88 to $91 mark. And year to date, I'm very optimistic about JD. Here we go. See, I'm very optimistic about JD. I think it'll go up long term. I just need a hold. It's just between now and the next 5 years, you probably will either hear me cheering or cursing about JD and Amazon as well. But maybe Tesla is going to save the day. Who knows? Who knows? Let's see here. Oh, jeez. Yeah. So, anyway, I shall talk to you guys later. I felt like this was a pretty important stream to do. I just wanted you guys to look into other viewpoints, because if anybody invests, and I know there might be a small percentage of people investing into what when I'm pointing to you guys, if you do not trust the long-term vision of the stock, then you will just sell out. And when you sell out, depending on how you feel, you might not feel too happy because you feel like you missed out on an opportunity. But again, if you know that you cannot handle volatility, then you should not stay in the stock market. That's just my opinion, because with the stock market, unless you have like a whole kind of, no, I don't want to say a bull mindset, but unless you have like a long-term mindset, you will panic if you see a little drop, or if you see it like go down, like this for instance. See, like if someone had gotten around $99 and then it tanked, see 95, they're like, oh, for frick's sake, okay. Oh no, 92. Okay, 94. Oh frick, I'm gonna lose all my money. 91. See right there? A person who might have sold around here, and when they bought into $99, they're not gonna see it when it starts recovering. See? That's what I'm trying to get at. So, if you cannot handle this kind of thing mentally, don't stress yourself out. Don't get involved with the stock market. I can personally handle this stuff. Some people, other people can too. But you will find that there's not too many long-term investors, in my opinion, out there, because, again, and as I have mentioned earlier, the people who are looking from the sidelines, they hear about like, oh, we're gonna, I should stay away from the U.S. stock market, or there's gonna be a crash coming in, and they want to get 100% out. But the sad thing is that if someone gets burned by the stock market and they sell, just me being honest here, in the event that the market does recovery, or when the market does recover, right? They could see it as they don't ever want to get into the stock market again because they feel like they missed out. So let's just do Microsoft. So for instance, let's go to the max here, right? Let's say they bought Microsoft around 2001. And then during 2001, you can see how the price of Microsoft fluctuated, right? So let's say you bought in at 25 bucks. And then you're holding it. And then you're like, okay, now it's 22 bucks. Let me sell it. And then after you sell it, it goes back to $25. And then you're thinking, frick, I don't want to get into Microsoft because Microsoft's now back at 25 bucks. Screw it. I'm not going to invest in the stock market. I lost. And then you hold, or you don't do anything. You just watch the stock price go up. And then you say, frick, I can't buy Microsoft because, I feel like it's going to go down. And then, then they see the $19, right? They're like, oh, good thing I sold my Microsoft because, now I won't have to, now I would have lost a lot of money. Right? If they see it at like $18. This is around, the 2008 stock market crash. So then they reaffirm that, I'm going to get out of the stock market because the price is lower than before. And then they swear off investing, and then just naturally over time, it goes up and up and up. And now, let's say they look back at Microsoft, oh crap, Microsoft's at $46. Yeah, I can't buy it. It's too freaking high. It's going to crash. It's going to be like 2008. And then it just goes up and up and up. And up, and up, and up, and so that is why I believe that time in the market is better than timing. And that's only if you believe in your stock holdings. If you do not believe in your stock holdings and you buy something like, I don't know, a sardine canning company. I don't know who the hell would buy that. But let's just say you buy some packaging material company. If you don't believe in that long term, then you definitely should get out of that. But I believe the gains are mostly in my tech stock, so that's what I follow suit, and that is what I recommend. So, I shall talk to you guys later.